A quick understanding, what is a reverse? It is for our senior set. The most popular one starts at age 62, although I have some options below that at 55. It allows them to convert a percentage of their home equity into tax-free cash. And the way that works is you take a look at the value of the property, the age of the youngest borrower, and you can access the equity that is available. Now, we also have to layer on top of that a loan amount if you've got a loan on there, but the rest of that you can access. So that's kind of how we work it. Every scenario is different. Every person's different. What are their goals? Those are the kind of things we want to look at. You have no monthly principal payment. That is always going to be optional. So if you're living with a reverse or if you're living with a regular loan now and you put a reverse on there, you no longer have to pay that mortgage payment, but you can, and there's reasons to. So there's always kind of reasons to consider it. Lastly, what's really important is we've got to always make sure our property taxes and our insurance is paid for. So we heard a little bit about that previously, about the use of property taxes. So you always have to make sure those are up to date. If you won't, you will foreclose. So it's the same with any kind of loan. So, the most popular one is called the FHA loan, or you also see it referred to as the home equity conversion. We probably do 90% plus. It's guaranteed by the government. So if you run into any issues with it, they will cover the cost. So for example, if your loan amount grows greater than the value of the property, they will guarantee it and cover that at the time that you leave the home. Okay, that's probably the biggest thing that we get asked about. This started in 1989. Right now, the max you can claim as far as value is just over 1.2 million. So that's actually gone up significantly, probably in the last 5 years. And so this is secret weapon number one, and it's called a line of credit. So this isn't like your HELOCs that you just go to the bank for Wells Fargo or US Bank. Not that they're bad, it's just their type of loan. What happens is when you get that line of credit set up, if you have the right scenario, that will grow over time. So whatever your loan balance is, as far as your interest rate, it's going to grow on the line of credit. This is how the product was built. So if you have $100,000 in your line of credit and you have a 6% interest rate, you'll have 106,000 in that line of credit the next year. So this is different than what you're going to get at your regular banks. And it gives you, they built it for seniors. So if you put it in early, that line of credit's growing. And over time, it'll double. I mean, this is a really great way for the younger seniors to get into a reverse mortgage and have it available to them in their later years. It's secure, so it can't be capped, it can't be frozen, which some of us probably saw that in 2008, where our line of credit was cut, it was frozen, it was, can't do that with this product. Okay. Key point here, though, if the loan amount is greater than the value of the property, the heirs will not be hurt. Okay, so that's just an important point about this. Okay, move ahead. Next slide, please. So I kind of want to end on a little bit of a happy note. The key question here is, what do you think your heirs are going to want to do? And I talk directly to the heirs. What do you want to do? We're going to sell. Well, so-and-so wants to buy it. Then I have to say to them, okay, you've got to figure out how you're going to do that and how you're going to pay off. I mean, they have to go through some, math to figure out, and it's through the estate planning if they want to do that.